Hello and welcome to another marketinout.com tutorial video. In this video, we will talk about backtesting and review how to use the strategy Backtester tool provided by Marketinout. Backtesting plays an important role in developing your trading strategy. It allows you to examine your stock trading strategy on historical data to determine how well it would have worked in the past. If you have developed a strategy that you are ready to go live with, the backtesting feature will help you to understand if your methods are viable and will potentially be successful in the future. The Backtester tool is easy to use and enables you to define a strategy concisely. Let's create a new strategy for testing by selecting Strategy Backtest from the navigation pane, and the new strategy page will be displayed. In the strategy definition section, we have to specify criteria for opening a trading position. Since we have left the default long value for the type of positions parameter, this criteria will be used to generate buy signals. If we would specify a short value for the type of positions, then the criteria will be used to generate sell signals. In order to demonstrate how the Backtester tool works, we'll select Moving Average Crossover System. This simple trading system generates a buy signal when the shorter-term moving average crosses above the longer-term moving average, and it generates a sell signal when the shorter-term moving average crosses below the longer-term moving average. We'll use the 7-day simple moving average as the shorter-term moving average and the 21-day simple moving average as the longer-term moving average. Selecting the criteria for opening a position can be done either by opening the Criteria Builder tool or by selecting a screen to extract criteria from. We'll be using the Criteria Builder, which looks the same as the Stock Screener's Criteria Selector pane, and we will start by selecting the Stock Universe criteria. I want to test the strategy on all stocks from the NYSE and NASDAQ exchanges, so I'm selecting them. Let's also add a capitalization criteria. I'm adding large cap and mid cap items from the corresponding criteria category. Okay, now let's add a moving average crossover criteria. From here, I'm selecting simple moving average of 7, crossed above simple moving average of 21. Now I just hit the Done button to finish selecting the criteria for generating buy signals. Next, let's specify the stocks prioritization criteria. The reason we do this is that during execution of the trading simulator, there can be a situation where the number of stocks which pass the criteria is more than the number of vacant positions in the stock portfolio. In this case, the stocks will be added in accordance with the prioritization parameter. I set this parameter to be the highest average volume value. In this case, for example, if there are 5 vacant positions in the portfolio, then only the 5 stocks with the highest average volume will be added by the trading simulator. Testing model parameters on the Backtest strategy page can be used to specify when a position must be added to the trading portfolio. It provides 2 options: close prices and next day open. If the parameter is set to close prices, the position is being added to the portfolio with entry prices equal to the close price the stock matched the criteria at. In the case of a next day open value, the position will be added with entry price equal to the open price the next day the stock matched the criteria. I will leave this as the default close prices value. Now let's specify the criteria for a closing position. For the moving average crossover strategy, the position close signal is generated when a shorter-term moving average crosses below a longer-term moving average. So I'm selecting here simple moving average of 7 crossed below simple moving average of 21. Please note, for the closing a position criteria, there is no need to specify any stock universe, so I omitted any exchange capitalization criteria. Now I will hit the Done button to finish selecting the criteria for closing a position. Next, let's specify position maintenance parameters. In this section, I can specify stop loss, trailing stop loss, and take profit parameters. First, I will need to select a unit for the parameters in this section. It suggests two options, either % or ATR. The following image demonstrates how a percentage unit works to calculate the stops and targets. Setting a stop loss order for 10% below the price at which you bought the stock will limit your loss to 10%. So the stop loss level is here. If stock's price falls below the stop loss level, the position will be closed to limit a loss on the position. If a trailing stop loss parameter is set, the stop loss level will be adjusted continually based on fluctuations in the market price, always maintaining the same percentage below the market price. We see that the level for a take profit order is here, and it will automatically close out a position, allowing us to lock in our profit. The next image shows how you can benefit from using an ATR unit for specifying the position maintenance parameters. Here, ATR stands for Average True Range Indicator. An ATR indicator is a measure of volatility over a specified period of time. A higher ATR indicates a more volatile market, while a lower ATR indicates a less volatile market. By using a certain number of ATRs, you ensure that your stop is dynamic and changes appropriately with market conditions. So let's select ATR as a unit for the position maintenance parameters, and we set 2 ATR stop loss 2 times the multiple of the ATR, and 10 ATR take profit, 10 times the multiple of the ATR. We can also limit a number of days we keep a position. For this, we can set a value for close position in the parameters. Let's leave this blank for our current strategy. Since we are going to test our strategy on historical data, we need to specify some parameters for the trading simulator. Let's set a value for initial capital, and we'll leave capital at risk, portfolio size, and backtesting time period to the default parameters. A capital at risk parameter asks us what portion of our capital we are willing to risk on a trade. Every time the trading simulator opens a position, it automatically calculates the amount of shares using that parameter so that the specified risk per trade is not exceeded. We can also see here that some field labels are marked with red double asterisks, which indicate the mandatory fields. The fields that are not marked with the double asterisk are optional. Let's give our strategy a name. Let's name it Moving Average Crossover. I will type the name here. Okay, now we are done with the strategy definition and we can run the backtest. For this, I can just click the Backtest button. Depending on the complexity of the system and number of stocks we are testing, this may either be executed very quickly or could potentially take a long time. We see that the simulation is completed as we are directed to the results page, and we can get a report that looks like this. Right here, we can see a number of different performance characteristics. The total profit, capital growth, which is the profit relative to the initial equity, the total trades executed by the system, as well as percent of profitable ones. The most important thing to look at is the profit factor. The profit factor is defined as the gross profit divided by the gross loss for the entire trading period. This performance metric relates the amount of profit per unit of risk, with the values greater than 1 indicating a profitable system. This report also shows maximal drawdown and absolute drawdown recordings. Drawdown is another important characteristic as it helps to determine an investment's financial risk. Let's switch to the image that demonstrates maximal drawdown and absolute drawdown. A maximal drawdown is the percentage between the peak and the subsequent trough. In other words, it is the highest difference between one of local upper extremums of the balance graph and the following lower extremums. And here we see an absolute drawdown, which is the difference between the initial deposit and the smallest value of balance within testing. We can also see a performance chart. In this case, the benchmark S&P 500 is represented by orange, and the strategy is here in blue. If we scroll a bit down to the performed trades listing, we can see details on which positions were taken when they were opened. For a certain stock in the position, we can open a chart and see entry and exit points. Let's open the chart for this stock. The green arrow is the entry, where you get into a trade, and the orange arrow is the exit point. Let's review this trade. We see the entry point, and here's the exit point. And the same for this one. Here's the entry point and the exit. Okay, here in this list of performed trades, we see the column indicating the reason a position was closed. Stop loss means we were stopped out. The position was closed to limit a loss. Take profit means we close profitable position, which reached the take profit level to lock in the profit. Period end means the position was forcibly closed by the trading simulator on the last day of the test time period, which was previously specified in Backtest parameter section. Let's return to the strategy definition page by clicking on the Edit Strategy link. Please note that it's important to have a capitalization or average volume criteria in your trading strategy. We want to build a strategy to deal with highly liquid stocks so that when we follow a trading strategy on the live market, we want to buy or sell orders that are easily executed. If we don't filter out thinly traded stocks, stocks that don't have a lot of volume, we can have a situation where the broker can't execute the order because there was not enough volume for the stock to fill the order. In other words, we can develop a profitable trading system based on small cap stocks, but we will not be able to really execute that strategy. It's also worth mentioning that the Market In-Out Backtester tool is based on the data that is survivor bias free. This means that the data it works with includes the stocks that died and the ones that are still alive. We have just tested our moving average crossover strategy on all stocks from NYSE and the NASDAQ exchanges. But what if we want to test the strategy on a certain list of stocks, or even on only one stock? This can be done easily. First, we need to create the custom list of stocks. So we will go to the Watchlists tool and click on the New Watchlist button. Let's give the list a name first. Since I'm going to add only one stock, that's Apple, I'll name it Apple. Then I click on the Add Stocks button and type the Apple ticker. Now I hit OK to save the watch list and go to My Strategies page, where I can return back to the Moving Average Crossover strategy editing. So let's open the Criteria for Opening a Position pop-up dialog window and select Universe, My Watchlists from this criteria group, and select the watch list that we have just created. Now we just click on the Add Criterion button. Since we have just specified the watch list as our stock universe criteria, we can remove the exchange and capitalization criteria. Now I'll hit Done to finish the criteria selection. Since the trading simulator will run on one security only, just for testing purposes, let's set the Capital at Risk per Trade parameter to 100%. Setting this parameter to 100% allows us to correctly compare this strategy with the previously backtested strategy where we risked 5% on a trade but had the portfolio size of 20 positions. Let's run the backtest. We are directed to the Backtest report page, and if we go to the Performed Trades listing, we can see that only Apple positions were opened. Let's click on the ticker name to review the position's entry and exit points. Let's look at this one. We see the entry point, and here's the exit point. And that is similarly displayed on this next one. We can see the entry point here, along with the exit point. Let's go to the My Strategies page, and we see our strategy is here. We can click here to go back to the editing page, or here to run a backtest for it. Now let's review the backtest log page. It can be very helpful as it displays the results for all backtests that we have ever run for a certain strategy. Each row in the table corresponds to one backtest previously run. So every time you run a backtest, the system stores its results here, and you will be able to review this log later to decide which strategy parameters worked better. The columns in this table are sortable, so you can easily realize which parameters led to maximal profit or maximal profit factor, and so on. This way, you will be able to optimize your trading strategies according to your priorities. For those who trade currency pairs and want to backtest their trading strategies on Forex, Market and Out provides a Forex strategy backtester tool. This tool has a very similar user interface and is adjusted to Forex specifics. That's all for what I wanted to show you this time, so I hope this video helps you get started with the Backtester. Please subscribe to our YouTube channel and leave your comments to the video. Thank you very much for watching.